All right. Hey, everyone. I'm David Walston. Thanks for joining the live stream today. Today, I got it right. Didn't close the wrong live stream. So hopefully let me know if the audio sounds good in the chat or if there's any issues. A couple housekeeping items. It should be about 30 minutes long uh, webinar, depending on questions, of course. So feel free to drop questions as we go in the chat. I may answer them as we go, and we'll definitely answer them when we get to the Q&A section. So what are we talking about? Mid-year money checkup. How do you know if your business is healthy? What's it mean for taxes? That kind of stuff. And the mid-year is a good place to start with that checkup. Why it matters? Halfway through the year is halfway through the year, essentially. You've got 6 months of data to look at, and that's what accounting information is. It's data to help you decide how your business is doing versus last year, or are you meeting your goals, or where the things are at, and how's your cash flow. Do you need to make adjustments, things like that. So the mid-year is a good place to start. We also like to do an end-year meeting with our clients if we can, towards the end of September, October, towards the middle of third quarter, to kind of get almost a year-end review before the year-end review. So the goal of this is to try to get ahead of where you're at before, so you don't have any surprises when you roll into the next year, and kind of help you plan out for next year as well. So what most people miss, a lot of times when you're a small business owner, especially, and even in personal life, you don't get around to looking at your finances because other things come up. Business in a business, you're running the business, you're managing your employees, your staff, your clients, your things, home life. You got kids. Summer, it's a little bit easier, but they're home all summer, so they keep you busy. And so a lot of times we forget to look at our finances to make sure things are good and we're tracking things right. And then finally, if you have to pay if you have to pay estimated tax payments, making sure you're making those timely. But maybe you need to change them. Did your income go up? Did your income go down? How's your cash flow looking? What are things going on? So making sure that you take the time to prioritize some things that matter. And one of those is looking at your finances of the business. So let's talk about that. One of the big things people think about a lot, and there's a good reason for it, is taxes. Taxes is a big bill you have to pay at the end of the year. If you're a W-2 employee, it gets taken out of every one of your paychecks, and sometimes you still have to pay estimated tax payments. But the thing with taxes that I like to point out to my clients is that taxes should not be the reason that you don't plan around taxes. Taxes are part of the plan, if that makes sense. Meaning your top priority shouldn't be paying the least amount of taxes. Your top priority should be other things, either family life, business. There's a wide array of different goals you could have. And then taxes should support those goals, but they should not be the end goal themselves. So reducing tax liability isn't the biggest thing in the playbook, but you need to know about it. So that's part of the mid-year checkup, is you want to be able to look at, is my business doing better? Am I making more money? Should I make adjustments to my withholdings on my W-4 if I'm a W-2 employee and I've got, a raise or a bonus? Do I need to make adjustments to my business? Are we heading in the right direction? Do I need to take extra distributions, more distributions, all that stuff? So that's where the taxes come in from my perspective, is we want to look at what your business is doing and say, okay, we don't want this to be a surprise. So let's take a look at it mid-year, end of the year, before the year end, to say, okay, this is where we think you're going to land. So it's important, but it shouldn't be what your goal is. All right, and then cash flow and profits. So normally on the individual side of things, this is a little bit easier. If you use a budgeting app, and you should probably use something to keep track of your income expenses on your personal side of things. Most of those budgeting apps are done on the cash basis, meaning anytime you spend money or get money, it all goes in. On the business side of things, a profit and loss net income is not the amount of cash you receive from the business, sadly. They do not equal. Sometimes they're close, but a lot of times they're wide variance there. And so sometimes I'll have business owners who come in and they'll have a couple $100,000, if not close to $1 million in net income that they're gonna have to pay taxes on. But they don't have $1 million in the bank, or they may not have $100,000 if they made $100,000 in the bank. And there's several reasons for that. That can be your accounts receivable, assets you purchased, things like that. So helping them understand where their money is going, as well as how their business is doing financially are kind of two different things that we need to look at. And so one of the things I wanted to jump and kind of pause here on is look at one of the resources that we have that we can provide. We're going to provide everyone in the call. I have a cash flow forecast, and this is my monthly version. Every business should be doing some sort of cash flow forecasting at some point in the business, and the goal is for it to take maybe 8 hours at the most to set up, meaning putting all the details in, understanding where all you spend all your money. And then from then on, it only should take 10 to 15 minutes to update going forward. And what the goal is with a cash forecast is to help you understand where you're spending your money and help you to plan for the future, see where any holes are or anything like that. So this is a monthly forecast. So it's going from August to June, July. These are all made up numbers. This top line here is for your bank. This is actually your cash. It's what you got on hand. So you want to start at the month and then estimate what you think you're going to get paid, what your operating expenses are, and then the net difference there is what you either have at the end or not. So the top line here is, and I'll zoom in a little bit, probably help a little bit. There we go. So this top line number here is if you receive all your accounts payable, and this bottom line is if you don't receive any. And then it goes out. So you can see from this cash flow forecast real easily, there's not any major cash problems other than the cash in the bank is going down slowly. And then in June, there's if things go the way this cash flow forecasts, these 3 months are going to be key because in May, you need to start planning on how to increase your incoming cash flow to cover expenses. If you don't, then you're not going to have a business by the end of July. The goal with a cash flow forecast is one, give you a little bit of comfort that you know when you'll have cash, be able to plan for expenses, income, but also this helps you, especially if you have to follow the revenue cycle of your business. So a revenue cycle is when you create a product to the sell of product. So if you're a manufacturing company, buying all the supplies, manufacturing the piece or product or whatever it is, and then finally selling it. From start to finish, that's your revenue cycle. And so you want to be able to understand how long it takes you to go from I make a product, get all the things for a product, to selling that product, and how long that takes and the things that go into it. So if you have a long revenue cycle, so some contractors do, if you're working on commercial projects or large residential projects, you could have a revenue cycle of like years. And normally in that year time frame, you get some dumps of revenue, but you're not finished until the very end. And so understanding what your revenue cycle is and using a cash flow forecast like this or other ones to understand when those things are going to hit helps you manage your business better and understand where things are going to go. So this is an important tool we're going to send everyone. Like I said, this is the monthly version. I have a 13-week version, and then we can sit down and customize it with you as well if you'd like. All right, so going back to the presentation. So I think that's an important distinction to keep in mind, especially as a small business owner, is that your profit isn't necessarily equal to the cash you have. So keeping those things in mind as you go through the year can be helpful. All right. So what does a healthy business look like? Depends. A lot of people hate that question answer, but it does actually depend. Depends on a lot of different factors. One of the main factors is margins. Like, do you have a healthy margin? Do you have positive cash flow? Yes, that can be an indicator of a healthy business, but not always. And why I say that is if you've had a past history of positive and healthy cash flow and margins, and then you're going into a year and you need to adjust things or change your direction, you're going to be possibly spending more cash than you're bringing in to set yourself up for the future. So it's good to understand what healthy means. And a lot of times that does mean you're making money, you're making profit, and you're putting cash away, but it doesn't always. So understanding that and kind of defining that is helpful. And we're going to talk about that a little bit more in the next slide as well. So how do these pieces come together? The biggest thing is you want to make sure you have an overall goal. So taxes, financial planning, cash flow forecasting, all these things are great tools, but unless you have a direction that you want to go in and a way to measure whether or not these tools are helping you reach that goal, those things are kind of important. So you need to kind of set up an overall goal. And a goal isn't make more money. That's not a goal because it needs to be definable. So this goal I put up here, say you want to grow your business where you no longer have to be in the day-to-day operations, but have a team of individuals that can handle that, and you as the owner work on growth. That is a goal that we can take and break up and quantify and create metric for. With that goal, you can make a lot more decisions on cash flow, where you want to spend your money, expectations for the futures, things like that. Another goal could be maybe you're in your 50s, you want to sell your business, or you want to retire if you're an individual in 5 years. What do you need to do to get there? You got to, if you're on that path, you need to define how much money you want in retirement, and then you're going to figure out how to get yourself paid that much money. And maybe that means you have to extend your retirement or years till retirement for more than 5 years. Maybe it's 6 or 7, just to build up the retirement accounts and make sure you put things in place to make it so that you can fund your retirement. Or if you're trying to sell your business, it's a lot of times what I recommend if you're trying to sell your business, and you need to clean up your books, make sure there's no personal information. You want to make your business look as good as possible on paper so that there's less questions asked and you get the best value because you can answer all the questions. But if you were to ask, if you didn't have a goal growth and then you saw a year-to-date increase in revenue, maybe your questions would be, well, maybe I need to adjust the estimated taxes I pay because, I'm making more money. Maybe I need to pay more. Or maybe I just need to pay some of that money aside and know that in April 15th, I'm going to have a big tax bill due. Maybe I need to adjust the cash reserves I have, or adjust where I put my cash, do some different investments, things like that. Look at some year-end purchases, maybe, things like that. But all of that doesn't really help you achieve a goal unless you've defined what that goal is. And so, like I said here, if you've got a goal and you've quantified it, maybe the income growth is a good thing because it says you're tracking to hit your goal. Maybe you're on track. But what if you're ahead? Does that mean that you can hire that extra employee that's going to take on more of your responsibilities and things like that? If you're behind, maybe you need to figure out how to get ahead. So the biggest thing here, and how to put all the pieces together to understand if your business is healthy, what kind of cash forecasting you need to do, tax side of things, is you need to understand what your goal is for your business and your personal life so that you can help quantify how to define if you're reaching that goal. If you don't have a goal, it's really hard to do. You can just kind of pay taxes and move on. And then that's where it gets frustrated when you have a big tax bill because you're like, well, I want my money. And it's like, define your goals, and then the tax bills become a little bit easier to deal with because they're expected. All right. Next up, here are some things that you would review, but like I said, you need to build out that goal framework. And the last thing I'll say on that, going back to this page. So say this is your 5-year goal. One of the quantifiable things we can do for you, if you were to sit with us and help you kind of work this out, is you got to define how much you need to get paid, what extra revenue you need to make, and what key positions you need to fill to start taking those things off your plate. In addition, you probably need to get some training or some education on delegation of tasks and management, because those are the two of the hardest things as a solopreneur or a business owner, is you want to hold all things and be the one end all be all for your employees. That's not going to work if you don't want to be in the day-to-day operations. So understanding how to delegate is going to help you get there. But defining those goals in a quantifiable manner makes it so that you can actually start moving towards them. All right, so what to review? You need to be reviewing your books, either your budgets for your personal or your financials for your business. You need to do this monthly, but I would say as a business owner, set aside a bit more time on a quarterly basis too to kind of dig into the details a little bit more. Check on your estimated tax payments. Check to see if you need to do any adjustments to payroll, whether that's W-2, W-4s. Maybe you need to up people's pays. Review a bunch of these things there. And like I said, we're going to provide this presentation, the slides and all that to you guys afterwards, as well as the cash flow forecast. So once you've got those goals set out, reviewing these things makes a lot more sense and is a lot more meaningful because you have a reason to look at them to see if they're leading you where you want to go so that you can make adjustments if you need to. All right, so some common warning signs for your business. You have profits, but not enough cash. So that's something we've seen with several clients. And there's explanations for it, but sometimes we need to sit down and talk with you. And a lot of times what will happen is we have some people who try to do their own bookkeeping, and sometimes that works out well, sometimes it doesn't. But I'll go through and look at their balance sheet. There's usually a suspense account with $50,000 or something like that in it. Reallocate everything, adjust the numbers, and then we can go through the books. So you need to make sure the books are updated correctly, and that goes to the second point there. If they're updated but not useful, there's issues. And so we can work with you to make sure that they are updated appropriately so that they are useful. And then you're making decisions without current reports. This can be fine if it's a small decision, a couple $100, but if you're trying to make a big business decision, you need to be looking at where you've been, project into where you want to be, and then kind of fill in the blanks with the knowledge you have about the industry. So if you're not looking at reports, those are some issues. And we can definitely help you with that as well. So what to do next? Actually take time. If you're an individual or a business owner, set aside time to review the last 6 months of 2026. Review your year-to-date numbers, compare to last year, compare to your goals, set goals. If you don't have any goals, set them. Build out a quantifiable goal. Sometimes it looks a little bit more not quantifiable. Start there and then start to quantify it. And then compare your numbers to your goals. Set up some goal signposts or goal markers or whatever you want to call them, targets, so that you can kind of see as you go past them that you're heading towards your goal. And then you want to celebrate that when that happens as well. Look at your cash flow for the next 3 to 6 months. Cash flow forecasting is a big deal. And then identify decisions that you should be made by year end. So if you're making a lot of money and you have a good amount of cash on hand, there might be some things that we can help you figure out to do to reduce your tax liability. But again, they have to be in line with your overall long-term goals. And then schedule a tax planning conversation. Love to sit down with you, talk for an hour, 15 minutes, however long you need to kind of figure that out. If you're just a plain W-2 employee, it may not be that long of a call. But if you have a small business, we're going to need a lot more information, and we're going to have to go through a bunch more information to kind of figure out where you want to be. So that's a big deal there. All right. What questions do you guys have? Are there any questions? And if you see me looking off to the right, that's where my other screen is with my screen recording and chat and everything. So one of the things I like to look at too, one of the things as a small business owner myself, is it's good to get excited about the future. And so goal planning is a wonderful thing because a lot of times we can get set in the minutia, especially with a year like this, which is a little bit weird from an economic standpoint. Inflation's up, inflation's down, gas prices up or gas prices is down, can be very taxing. And so one of the things that we need to learn to do as small business owners to be better at what we do is to work on the business and not just inside the business. And that means looking at it from a higher vantage point, goal planning out into the future, and figuring out where we want to be. So if there aren't any questions, I'll give it a minute or so more. We can kind of end there. But before we end, and feel free to post questions, I would love to meet with you and do some planning. Planning is very important. And if you don't do it, like I said, you can get surprised with taxes or just in general, not having enough cash to pay for things. And so just having some planning can help reduce your stress as a business owner or an individual. Honestly, if you're an individual, having a budget and understanding where you're spending your money can reduce your stress a lot, because you know, okay, things didn't go as expected, but I can adjust X, Y, and Z and things will be fine. But if you don't have a plan or you're not cash flow forecasting, you're not doing any of that, it's really can be very stressful as a business owner because you're trying to just run your business essentially from your bank account. So meet with us. You can give us a call, shoot us an email, visit our website, but we would love to set up a time to talk with you. All right. That's all I've got to go over today. Again, if there's not any questions, we will end it there. Thank you for your time.